Hi, this is Scott Martindale of Sabrient Systems with this week's SectorCast. Well, you got to hand it to the bears. They're pulling out all stops to try and derail this bull's freight train. This week, and it's just as the S&P 500 is trying to eclipse its all-time highs, so traders are a little nervous at these heights anyway. This time they trotted out the tiny Republic of Cyprus with its 1.1 million population and created a global financial scare when they started talking about stealing depositors' money. And of course, Russia's not happy because they have massive and perhaps largely illicit deposits from Russian citizens there. So now Cyprus is looking to Russia to try and help bail them out of this. But the FOMC did their part to try to support the bulls by coming out with their decision to maintain the Fed funds rate at 0.25% and to continue their $85 billion monthly asset purchase program. It's also notable that in the midst of this global currency war we're seeing, with the dollar strengthening since the 1st of February, equity bulls have not been deterred by that. And that's a divergence from the inverse relationship that we've seen and have grown to expect for several months, years even, at this point. The healthcare sector continues as the clear performance leader on a year-to-date basis among the 10 U.S. sector iShares that I track. But almost all shares, perhaps with the notable exception of telecom, almost all sectors are strong this year. And it's really corroborating the high equity correlations we've been seeing, all boats being lifted on those strong bullish days. And we're seeing that in our bull score. The bull score really from the top sector to the bottom sector, it's a very narrow range. And that's corroborating this high equity correlations that we're seeing elsewhere. Notably, the technical picture remains strong. I like to watch the S&P 500 Spider Trust, the SPY. It bounced off support with this recent weakness, and it's back there trying to break back into this rising bullish channel that we've seen since the beginning of the year. I really think it has a good shot at not only breaking through the all-time closing high on the S&P 500 at 1565, but also the intraday high of 1576, and perhaps head towards 1600, unless the bears can trot out a stronger boogeyman than Cyprus. Looking at Sabrient's fundamentals-based SectorCast ETF rankings of the 10 U.S. sector iShares, technology, once again, is number one with a score of 91, and anything over 90 is just extremely high and very strong. Financial, the IYF, remains in second place. Both of these ETFs show low forward PE and solid support from Wall Street analysts, and by that I mean that there are positive earnings revisions. Stocks within financial also display the best insider sentiment or insider buying activity. Telecom and basic materials remain at the bottom with the lowest scores. Overall, this week's rankings really continue to maintain a slightly bullish bias that we've been seeing. There's been a little bit of shuffling though. Energy, the IYE, and consumer services, the IYC, have both risen in the rankings, while defensive sector consumer goods, the IYK, fell on a rash of analyst net earnings downward revisions. Top stocks within technology and financial include Commvault Systems, Cree Inc., Franklin Resources, and Portfolio Recovery Associates. Thanks for listening.